Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The first half of the week is all about what the Fed has said. Yesterday, St. Louis Fed President Bullard, a dove, did say that a downward policy adjustment could be warranted soon. And today, more importantly, Fed Chair Powell said they're ready to act as appropriate, meaning if growth slows further or some of the data which has contracted contracts further. If we start to see that, the Fed is going to be ready to act, as in cut rates. Right now, you're seeing the CME's Fed Watch tool price in the probability of a Fed cut this year up to 97.5%. That's 25 basis points. They're also pricing in a 50 basis point cut, about 85%. Not only that, they're pricing in about 85% chance that the Fed cuts by September. So we're starting to see this big shift here in pricing in a Fed cut in this year as the data has slowed. Manufacturing was pretty bad to see it to start the week off. Now ISM non-manufacturing is going to be the big read tomorrow. This services sector read is not the only one. We have services data, PMIs throughout Eurozone early on, and then the services PMI ahead of that ISM non-manufacturing from the U.S. as well. So watch this whole deluge of services data tomorrow. It's going to be crucial. You also have ADP payrolls ahead of the jobs number. So ADP payrolls tomorrow morning, 7:15 a.m. Central Time. It's going to set a tone for what we could see a non-farm payroll. And again, that non-farm payroll number is going to be the big one of the week on Friday. So it's going to the back half of the week is going to be really reliant on what the data tells us. The dollar index did fail to get out above 98 once again, and now we're about 1% off of that. Today's session, we've seen the dollar index weaken throughout the session. There's a lot of support, 96.75 to 97. Weaker U.S. data will push the dollar index down through there. However, if we see somewhat in line U.S. data with weaker Eurozone data, then it could buoy the dollar up. You find a little bit of support at that 97 mark. So what we're looking at ultimately too is the euro. And the euro, there is a trend line. We talked about on the FX Rundown written report last night, about 113.30, and it's coming in a little lower as the week develops. So watch that. That is our major three-star resistance. We do have some resistance right at the 112.65, 112.70 area that the price action has been tethered to. So watch all that. Now, moving on to the yen, we've seen a recovery in equity prices, a recovery in risk assets that has hurt the yen because as well the dollar index has stayed just about stable here today. We've seen treasury prices come in. They've gone a little overdone here in the near term. So where that U.S. 10-year is at near 2%, it's going to consolidate just a little bit. What this all has done as the stock market has rallied is pull the yen back a bit. Now, we talked about it last night. Our next major three-star resistance level in the yen, it was hit to a T. Look for a consolidation back down to 92, just below there. That could present a good buying opportunity, but for now, you want to be patient in the yen. Now, moving on to the commodity currencies, the Aussie, the RBA did cut rates last night. Now, you're seeing the Aussie actually trade higher after rate cut. It was basically fully priced in. Now, not only that, the Aussie's been overdone. We have a lot of support to the downside. It isn't out above a major three-star resistance. Watch that area right around 70. It's going to be crucial to watch, but you also want to watch what is the U.S. and China trade rhetoric, how does that develop as the week goes, and what do the risk assets do, what do stocks do, what do commodities do. It's going to affect the Aussie. We have GDP data out of Australia tonight, so watch that. And then the Canadian dollar. The Canadian dollar, again, just still holding ground. Crude oil is recovering, but what you see from the Canadian is going to be more reliant on what the U.S. dollar does through tomorrow with all of the data. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial and research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.